Good morning everybody and welcome to this European session webinar on Wednesday the 11th of September. Hope you're all well, hope you had a fantastic trading week so far, ready to now deal with some of the higher impact news announcements coming out midweek as we see out the end of the week. So let's dive into the market, let's have a look at some overnight comments from Asia, where the focus is today, and get an update on some of the positions that we have been trading this week so far and any potential trading opportunities for today and over the next few days that have been highlighted through the London and Sydney trading floors. First of all, we've had the Japanese yen hit an 8-month high overnight on Bank of Japan comments. So Bank of Japan Policy Board member Junko Nagagawa repeated comments from Governor Ueda that the degree of monetary accommodation will be adjusted depending on price, economic and financial conditions. And the Bank of Japan are likely to adjust the degree of monetary easing if economy moves in line with projections. So basically what that means is traders are now pricing in that maybe the Bank of Japan could do another interest rate rise. So the Bank of Japan is a bit different to many other central banks. And if you have been trading over the last several months, in particular July and August, you probably have been trading a lot of the yen pairs, because in July and August all the yen pairs were crashing lower, beautiful downtrends across multiple time frames, huge sell-off, and pretty much that actually sent the Japanese stock market crashing lower as well. They had the biggest it had the biggest one-day drop since 1987, wiped out all the gains it's made over the first 6 months of the year, got wiped out literally just a few weeks. And the reason for that is because for many years, one of the simplest trade among money market fund managers was to go to Japan and borrow money very cheaply in Japan, because they've kept interest rates at 0.1% for decades, all right? Even when many other central banks were increasing interest rates. And people then will take that money they're borrowing in Japan and then go and park it into a country with a high interest rate, and they'll pocket the difference between the two interest rates. It's what foreign exchange traders call the carry trade. And for many years, it was a fantastic trade with a lot of yen pairs, rallying higher in big long-term trends. But the Bank of Japan started to change their policy in July and August, which caused a massive exodus of leveraged short bets from hedge fund managers. In fact, the moves were so big that you probably even read them in the Times and the Guardian and the Telegraph. Traditional newspapers in the UK were actually talking about these moves because they were so big. I mean, we were trading them anyway because they had some nice lower low, lower high cycles. The market already told us what is actually happening, and it was a great month. The best month of the year actually. So we've been looking for that to continue, but after such a big move, the market often goes sideways. But why we've seen a lot of yen pairs, Swiss pairs move a bit sideways in some trading ranges, but we are looking for that to pick up. It's the currency market. It's not going to stay quiet for long, all right? But we have taken a bit of a breather over that summer month on those particular pairs. Now, the Swiss has been doing the same thing, tracking the yen very similarly, and we've been looking for continuation of the yen pairs and the Swiss pairs. In fact, we've already had a Swiss trade this week, which is actually moving quite nicely anyway, but we'll keep an eye on any potential trading opportunities if those trends can resume in the yen pairs. Of course, if there's any opportunities that I can highlight in these webinars for you guys, I will do so, but then make sure you're tuning into all the other live trading webinars every day to then also try to identify and capitalize on those trading opportunities as well. Now, today we have the all-important US CPI report at 1:30 p.m. UK time. And CPI stands for Consumer Price Index. It's released by the Bureau of Labor Statistics, and it measures the change in the price of goods and services purchased by consumers. Consumer prices account for the majority of overall inflation, which is used to determine interest rate policy decisions. And the year-on-year figures from June was 3.3%, July 3%, August 2.9%, and the September forecast now is for 2.6%. So inflation has been coming down, which is why there is a high probability chance of the Federal Reserve cutting interest rates later on this month, widely expected, pretty much a foregone conclusion. But now, because of recent economic data, the question is not whether central banks are going to cut interest rates. It's pretty much a given. Now it's about, okay, how big is the interest rate cut going to be? So we already know there's going to be a 25 basis point interest rate cut, but now the markets are pricing in a high probability chance of a 50 basis point interest rate cut because economic data has been coming out a lot weaker, suggesting that growth is starting to slow down. So this could become quite interesting if we get a bigger interest rate cut or a bigger interest rate cut than expected. That's where we'll probably start to get some bigger moves developing in the markets. Remember, everything is already priced in, so sometimes we don't get any movement on a news announcement, but really what we want to be looking for are any surprises, okay, because then that will cause institutional players to readjust their portfolios accordingly, and then we can trade that follow through as they do that. So we'll be keeping an eye on those dollar-based moves and see if there's any opportunities regarding those. For now, let's go into smart charts. Let's see what's been happening. Okay, first of all, quick update. So in the Asia session, we had 2 orders on the Nasdaq. So one order was on the Nasdaq, the interbank radar strategy, where we had an arrow here. We were looking for sellers to turn up here in this moving average zone and get a trend actually developing. Now our order expired because sellers didn't turn up. You did have a chance of a re-entry here if you were trading, which has already hit your target, but obviously it depends on whether you're trading at that time or not. I'm not necessarily trading at 2 o'clock in the morning UK time, but if I was, then that's a trade we would take in. And sometimes when you're trading the end of phase 2, beginning of phase 1, you know, you might have an order here, but look, sellers don't take out the low and trigger the move lower. So it expires. You might get another setup here and then take the trade, but then sellers don't turn up to continue to move and get through the low, and it expires. And then finally, you know, you're still trading in the same moving average zone, and then sellers do turn up, you know, then goes to your target level or stop loss level, all right? So sometimes you might end up taking a few trades that expire before the phase 1 move actually starts, because remember, we're not in a momentum-based market. We are in more of a positional market where we've seen a bit more ranges develop than anything else. So it's something to be mindful of. So in this instance, we'll see if there's any other re-entries here that could develop, which could become quite interesting. I think maybe the next move will be to, because the interbank radar strategy is more of a momentum-based strategy, okay? But there's still potential chance here, I think, on the market breakout strategy, where you can see that we could have a chance of a re-entry because we still have that cycle structure intact. We've come into these longer term moving averages on this particular strategy, and we've broken through this low point here, which could act as an area of resistance where sellers could potentially turn up and continue a move. So this does become quite interesting. Let's see if sellers do turn up here. Now there's a chance that if the central bank does not increase, cut interest rates as bigger as the market is expecting, we could see some more weakness, all right, in the stock market. But if they do, then we could see a bit more of a rally in the stock market. Now we don't know what the news announcement is going to be, but this is why we need to manage the situations and manage risk. So then what we don't want to do is start, you know, shorting the Nasdaq, the S&P, the Dow, just over risking the trading account all towards stock indices. So just, you know, one trade here is fine, and then if it goes, that's great. If it turns, it might expire, but then we can, you know, get back on the bandwagon and look for some potential upside. So it's about managing risk of the portfolio, all right? Now, not only does smart charts help us to identify these trading opportunities, but also do the risk management work, which is obviously the most important, because if we click this sell icon here, it will populate an entry price at the blue dot, stop loss at the red dot, target the green dot, do all the risk and portfolio management calculations for you as well. These can all be adjusted accordingly to your own user preferences, and it will also do the expiries as well, okay? And we'd like to set an end of day expiry on this particular strategy here and decline or accept the trade. Of course, all those price levels can be adjusted according to your own user preferences and the way that you're trading as well, all right? Now, we also had an order pending overnight in the Asia session on pound New Zealand, where we were looking for buyers to actually turn up here. So we did some deep analysis here, didn't we? And we had a lot of similarities in what was happening here, the break of this wedge formation, to what we actually had here. We've been looking for this upside movement. Now the order overnight didn't trigger because buyers didn't get to the entry level that we had, but look, we will be looking for price to sort of continue this move here. So, we'll be keeping an eye on maybe some momentum strategies, phase changes, T-waves, that kind of stuff, to get us into that sort of move and get some trend continuation cycles actually unfolding. We did talk about the British pound and how the fact that whilst most central banks are cutting interest rates, including the Bank of England, it's likely at the end of the year the British pound will have the highest interest rate, right? Even though everyone's cutting it, because they started off at a higher place anyway because of everything that happened with the Liz Truss quasi-Quarteng mini budget a few years back, all right? And so we have been looking at that potential as well. Now, in this instance, we do have some interesting things going on here on pound US. It's a positional trade because we're not in that sort of higher high, higher low cycle territory right now, all right? So it is a bit more of a positional trade where we can see we've had this big movement to the upside, and now price is just moving sideways. So we have price trading on the this lower support level, and you can see that we probably are trading inside of a trading range, and we're at the bottom of this trading range. We know around this moving average buyers turned up before, so we know there's a high probability chance that buyers could turn up again, and this could be a bit of a breather before the market does sort of continue in a bit of a direction here, all right? So there is potential for buyers to turn up here, but it's a positional trade. It's not just like the sort of direct higher high, higher low cycle that we would usually trade, because the market isn't in that situation right now, is it? Okay, we've already come from those cycle formations. So again, if you look at something like the euro, for example, we've come from that phase one, phase two, phase one, phase two, phase one, phase two situation. We're not in that situation anymore. We're kind of in this sort of positional situation where a trend hasn't yet developed. We're just waiting for a trend to develop. Okay, so obviously when you're trading, this is high probability stuff. When you just have the direct cycle formations, and that's why you start off like that and learn Forex, and then in the future you go on to add on more positional stuff, adjusting risk management, reward to risk. There's like a bit more to it there, right? But we are in these sort of positional territories here, so in this instance still would be lowering the risk accordingly to deal with these things, right? Now, this obviously depends on what kind of exposure you want to have to your trading account. We already have a few dollar-linked currency pairs running already. So if you recall, we had, we still have Euro Swiss, which we were trading here because it had broken through. We had a nice bounce of the moving average zone, and it consolidated a bit, but then it had broken through this wedge formation here, and then we were looking for the trend to continue on this positional trade, all right? So then, that's okay, and then we can look for continuation. In fact, in coming up into the high impact news announcement on the US dollar, which affects everything, you might even consider taking some profits off the table here, and or even moving stops to break even, all right? So you've got a few different options actually. So some traders, they might move the stop loss to a break even level. So if you click on the stop loss, for example, then you can just move this to a break even level, and then decline or accept it, okay? Some traders, they might just decide to adjust targets and so on. So if I just move that back, then some traders might just click on the sell entry and then might actually scale out of a trade, take some profits off the table and leave some profits to run, all right? So, you've got a few different options here. Really, the way we've been trading, in this kind of environment, we've really just been taking the money and running, right? Because we're not in a momentum-based environment, okay? We don't want to give in these positional trades too much space to kind of work out, all right? We know it's going to take a bit longer because we're in a quieter part of the market, but we've been just a bit more conservative and just take the profit where it is. And then of course, once we start to get these big momentum trends unfolding, right, you can also see that all the bars here are just, there's a trend, but they're all just a bit more closer together compared to what we had before. So here we've just been being conservative, taking some profits, when we have some good reward to risk as well, but it's not necessarily that very high reward to risk long-term trading environment we were in before, all right? So it is about managing those different situations, all right? So you've got a few different options there with Euro Swiss, and We also had the vol reversal trade on dollar Swiss at the bottom of the trading range, but the dollar's kept on weakening, so that's probably going to go to the stop loss. It hasn't yet, actually. So, let's see how some of these moves develop. We might get a bit more clarity after that US news announcement. Now, another dollar pair that is also seems quite interesting is actually US dollar against the Canadian, because what you can see here is that we've had this move to the downside off the moving averages, okay, the moving average zone, and you can see here with just a deeper correction, all right, we just had a deeper correction, but we are coming into this kind of zone here where, it's a major turning point, isn't it? We've had a lot of turning points developing around this area, so again, it'll be interesting to see if we're going to get another turning point here and maybe a bit of a continuation of the trend. Now, it's a positional trade because, of course, we're not in this momentum trend we had here. We are in this phase 2, and it's made this sort of mini cycle in between. So you've got a few different options here. Some traders might take a positional trade here, just in case it does go lower. And in this case, obviously, if you're taking a positional trade, smart charts will help you with the entry stops and targets and risk and portfolio management, which can all be adjusted. And on a positional trade, we would obviously lower the risk here, okay, and then just obviously set the same expiry at current bar close, all right. Now, if you're a momentum-based trader, let's just say from Learn Forex, then what you would wait for is actually for sellers to turn up and then the momentum cycle to reset itself. Right now, we're just in a bit of a sort of shakeout territory, all right. So again, it's about managing risk in these situations, all right. But you can see that you're in a different kind of situation to what we had been across like July and August, the big trends, so we're just adapting to that accordingly, all right? Now, again, if you need to go through risk management, portfolio management, how to adapt to changing volatility levels of the market, when you're trading transitions from one market condition to another, then speak to your coach, right? Learn about these things, log into the webinar, see what the guys are trading, ask them questions, utilize all of the resources you have available to you within inside of smart charts, because you do have a lot of resources available to you to aid in your trading performance. For now, that's it from me. I'm going to wish you all the best for your trading today, and I'll see you next time. Bye for now.